Anyone who is even remotely familiar with the cryptocurrency world is likely to have heard of Terra and Luna and the large volumes of burned coins they have. What's the point of it all? For starters, to learn the answer to that question and to gain a thorough understanding of Terra and Luna as a whole. Let's get started with the video for today. In order to keep you updated on our latest videos, we'd like you to turn the red subscribe button gray and enable post notifications. Keep in mind that I am not a licensed financial advisor and that investing in cryptocurrencies or anything else always involves some level of risk. When it comes to your own money, you should always be on guard and do your own research. With that out of the way, let's get started. The demise of fear and paranoia. When the $40 billion digital asset ecosystem crashed in May 2022, it was the biggest cryptocurrency token crash ever. Stablecoin USD and its twin token Luna, which were designed to keep the value of the US dollar stable, have fallen nearly to zero in just a few days. Before the collapse, both USD and Luna were among the top 10 cryptocurrencies. The Terra blockchain had to be shut down twice during the incident. A new coin, the Luna 2.0, was created to address all of these problems and burn the previous iterations of the coin. We now call it Luna Classic. Terra and Luna themselves are working to raise the USD value. Let's take a trip back in time to see what all of this means for ourselves. Luna is the name of Terra's native cryptocurrency, which was developed by Terraform Labs, a Korean startup. In order to fund this project, Luna coins were sold privately for $32 million. Centralized exchanges like OKX, Huobi, and Binance were used to invest in the stock market. The founding team was led by entrepreneur and investor Daniel Shin, a Wharton School of Business alumnus who founded half of a fintech portfolio company. When it came to decentralized finance, Luna was a leader for a while. CoinMarketCap officially placed it 7th in terms of market capitalization after its launch in 2019. Since the most recent crash, it has fallen to 215th place on June 19, 2022. The goal of the term blockchain as a staking or protocol token was to create stablecoins that combine the decentralized freedom of cryptocurrencies with the stability of fiat money. In order for this system to work, Luna was essential. Stablecoins Terra USD and Luna USD have been used to create a dual token system on the blockchain. Burning U could also trade Luna for TES, which was the product of Luna, because more Luna would be burned to produce more dollars. It was hypothesized that a rise in the USD price would devalue the currency. In contrast, they were exchanged for Luna if the price of USD fell below $1, which increased the value of USD. Current data suggests otherwise, as they rely on each other for their stability. A comparison to the Earth-Moon relationship has been made. Burning Luna coins was necessary to keep this dynamic going because it provided users with a reason to use Luna by giving it a monetary value and, in theory, stability. It was only possible to have 1 billion Luna coins in circulation before the May 2022 crash. On CoinMarketCap, it is stated that Luna was burned if this quantity was exceeded. As of June 1, the circulating supply of Luna Classic, the original Luna, was 6.5 trillion. After Terra's Columbus 5 mainnet upgrade, Luna's price hit a new all-time high of $49.45 on October 4th. On the 30th of September 2021, several new features have been added to the Terra blockchain in the last few months. The transfer of USD to other blockchains, for example, has been made easier and faster thanks to this technology. With the Cosmos blockchain network, Terra is able to accomplish this. Included in the release are Luna upgrades. Luna was transferred to a communal pool and reinvested in new applications prior to the Columbus 5 update's destruction. Due to the fact that the value of Luna's tokens depended on Terra's development, the price of Luna has increased as a result of the coin's permanent incineration and the resulting increase in scarcity. In July 2019, the price of the coin was $1.31. A year later, it was still under $10. It was only at the end of 2021 that Luna's value surged to its highest ever value of $103.33 on December 27. Luna defied expectations set in the first months of the year 2020. On April 5th, the stock market rebounded to a new all-time high of $119.18. Despite this, the token's price fell sharply after that, and on May 6th of that year, it was trading at $82.94. According to a Nasdaq report from August 2021, Terra is different from other cryptocurrencies in that it works and offers a new approach to avoiding token asset volatility. Emma Newberry, the book's primary author, stated there is a lot going for Terra: an experienced leadership team, a clear white paper, and several big backers. But things started to turn upside down, and on their heads as fate would have it, Luna's value plummeted in May 2022 as the flaws in Terra's ecosystem became apparent. When Bitcoin hit its lowest level in 10 months on May 10, 2022, the wider cryptocurrency market was pessimistic. On the same day, Luna's price fell below $40. Afterwards, the coin fell to a record low of 1,675 cents on May 13. On May 11, Luna's algorithmically supported Terra stablecoin lost its $1 peg. According to the CoinMarketCap, the price has dropped to 29 cents. Dogecoin CEO Terraform Labs Dogecoin tweeted a proposal to burn USD on May 11 despite the community's approval of the plan. While Terra was occupied with another issue, she was unable to participate. The burning failed because it attempted to consume more USD than were available. Dogecoin took the initiative on behalf of the community that remained and focused on how to revive the project. It has resulted in the existence of two Terra blockchains, one of which uses Luna Classic and USD tokens, the other Terra blockchain, which uses Luna as its native tokens. If you're baffled, you're not the only one. Returning to the actual burning of Luna, however, as a first step, let's define what burning actually means. Burning is the act of removing a predetermined number of tokens from circulation in order to raise the value of the tokens that remain. This is done by moving the burner tokens into an inactive, untraceable cryptocurrency wallet in order to lose the desired number of tokens. They're effectively worthless now that they can't be used. As a result, the word burned was coined. So, what's the deal with the burning of Luna coins? By burning a whopping 85% of tokens, Terra Luna is frantically trying to restore token value following a disastrous crash that occurred earlier this month. Terra's Luna partnership with the stablecoin Terra USD is the primary cause of this widespread burning. The only way Terra USD can regain its $1 value now that both tokens have fallen is to burn a large number of Terra Luna tokens, which would increase the value of the linked stablecoin by igniting the Luna owners' plan to make their coins rarer and drive the price back down to $1 with a 1,700% increase in supply in days. This price would necessitate a large investment to recoup. Binance's CEO initially seemed to favor this strategy.